Hello, my fellow investors. I'm not planning on recommending buying or selling any securities on my channel, and neither am I planning to tell my viewers what I bought or sold. I have a few reasons for that, but I've seen so many comments on DHC of people who are holding this stock for years and they don't want to sell it because they lost so much. I actually feel very sorry for them, and I made this video especially for them. And because this is really a very painful sight, I'm going to do this one time and what I did in this case. So I'm not preaching to other people what I didn't do. So I bought this stock on September 1st at $1.42. That was my price. And I continued on researching it. I knew I had a problem with management, and I continued on researching it. I published my video on RMR incompetency and their moral corruption on October 18th. But like a week before that, when the stock was trading around $1, more or less, I really came to the realization that I'm going to sell the stock. And the only reason I didn't sell it right away, and that's what I was planning to do, was because I posted on my part 7 of the series, I posted that I saw for really 3 quarters that the margins were becoming better, and the occupancy rate in the senior homes are becoming better. So I told myself, I don't need RMR to do anything. Just let the things work out by itself. Occupancy is going up, and the margins are becoming better. I'm willing to take the risk that RMR isn't going to stab me now in the back and take away my assets. And I said I'm willing to wait. So that's why I didn't sell it right away. But what I was waiting for was for the next report. And when the day the report came out was November 2nd, after the end of the trading day, they gave out the report. I made the video that same day. The next morning I sold the stock. I sold it. They gave out the report November 2nd. I sold it the next morning at $1.30. The only reason I didn't sell it before, I have no problem with it going down and losing 30%. When I bought the stock, I knew one thing. I have here either a 10-20 bagger, or I'm not going to lose a lot of money, or maybe 10, 20, 30%. I knew my risks. I knew my returns. The second I figured out that I did made a mistake, I would have sold it right away, only because, as I said, I saw the margins are becoming better and the occupancy rate going up. The second I saw that isn't the case and the margins aren't becoming better, I sold it right away. So I'm not preaching to you, whoever's holding the stock, I'm not going to preach you something that I didn't do myself. Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much. So basically what I want to tell you, I'm not giving you any recommendation to buy or to sell. I want you to ask yourself, what's your strategy? If you're keeping on holding it only because you lost money and you're hoping the stock price to go up, hoping isn't investing. You might as well just buy a lottery ticket and hope you're going to win. Hoping isn't investing. You have to have some kind of strategy. Why are you keeping it to hold the stock? Because it went down 90%, you don't want to sell in a loss. Even a stock that lost 90%, you can still lose another 90% in it. A stock that went down from $1 to 90 cents to 10 cents could still go down from 10 cents to 1 cent. You lost in the 90 cents doesn't mean you shouldn't sell it. You could still lose another 90 cents, another 90%. So you have to ask yourself, what's your strategy? So I just want to point out, all RMR companies are doing bad, but DHC is linked with ALR. And I just want to point out ALR, what they're doing since 2012. So 2012, this is ALR. The net income is 24 million, and from then on, they're only losing 2 million, 85, 43, 21, 20, 70, 20, 7, 29. They're just losing money. And DHC is linked with ALR much more than any other company with RMR. And as you can see, here's a graph. This was in 2011, $84. Since then, you can see, this is, what's going on over here? $82, yeah. Over here, just going down and down and down and down and down. Here they made a stock split, a reverse stock split, 1 for 10. DHC maybe is now trading at $1. So they can make a stock split and can go down from 10 to 1. Anyone who bought this at the peak at $80, and that was the peak before they started losing money, they lost 99%. To keep on holding ALRs is it's dumb. Like, what's the strategy? How do you plan to get out of this, whatever you're stuck in? So I'm just pointing out a few things what could be. If your strategy is that the COVID is going to be over and DHC will start earning money, well, we saw that. This, as I point out in the video number 7, of this series. These margins are crazy. This is the shop margins of DHC. And as you can see, this is Q1 in 2019, 79%. That means from the revenue of 108 million, they had operating expense of 85 million. The margins is becoming worse and worse and worse. 99%, 103%. That means they're losing money every quarter. Yeah, and this is before. This is only the EBITDA. This is only the operating margins before any other costs. And in the last quarter, they got a revenue of 258 and their expenses were 264. So, if you know the RMR business model, I explained this very thoroughly in the past videos on RMR. RMR is a very simple business model. They have their company which manages their own companies. Their company is always getting a fee no matter what the company they have that they're managing is doing good or bad. It doesn't make a difference. They're getting their fee. Barry Portnoy built a very simple business model and was very successful. He's going to have his company, which he owns, which is always getting fees from the company that he owns, which he manages. And no matter what happens to that company, he's getting his fees. Now, if the company that he owns is doing good, okay, great. If the company he owns isn't doing good, okay, so he's going to wait and he's going to bleed out the company as much as he can. And then he's just going to merge with another company. And then when he merges with another company, what does he do? He just brings in another whole stack of new suckers who would invest in his new merger and his new stock. And he gets money from them. He issues more shares. He takes on more debt, whatever it is. There's always going to be a batch of new suckers who are going to invest in his new company. That's the same thing going on from the 1980s. I checked this out. You could check out HRPT, CWH, TRMT. It's a long list of companies that merged and remerged and remerged. So if you're betting on RMR to become competent, that's a losing bet. There's no chance. This has been going on for 40 plus years. They don't care if the company makes money or not. If they bleed it out and once it doesn't make money, they just merge with a new company, get a new stack, a new batch of suckers, and that's it. So if that's your strategy, that's probably not going to win. If your strategy is that there's going to be a bull market and the stock has to go up with everything else, okay. If that's what you're willing to bet on, there's going to be a bull market, and even so, there's no reason for the stock to go up. It's going to go up anyways. Okay. If that's your strategy, okay. If your strategy is that the shareholders will come together and fight against the Portnoys and RMR, well, history showed that didn't work so much very good. There's a long list of battles that have been going on for years and years against Barry Portnoy and everyone, and now there's full of illegal battles. They hardly ever lose. They built a very, very successful business model. They always get their money. They built it into the prospectus of every company. They put it inside the risk factors of every company. They printed it out very, very exactly how they want to manage the companies, and the shareholders don't have any word on how to do it. So that history would show that would be a bad bet also. So if you're thinking to yourself, I know that there's a bad company, it's a bad management, but I'm still holding 10 cents for a dollar. Well, my assets are worth a lot of money. So that's also not a very smart strategy. Would you buy a real estate that's worth $1 million for $100,000 when you know you can't rent it out and it's not generating any cash, and you're just paying expenses each year? You have to pay taxes, you have to pay maintenance costs. You're not going to get any money from the real estate. Would you buy it? No. So what do you care that you're holding a dollar for 10 cents? So what? This company is losing money. No one's generating any cash from this company because ALR is mismanaged very badly, and DHC is in the same ship with ALR. And if ALR is not going to be managed good, DHC will continue to lose money. So why do you care they're holding 10 cents for a dollar? This dollar cannot generate cash. It's only generating losses. So I don't get that strategy either. So I'm not recommending buying or selling and not recommending anything. What I'm pointing out is think what your strategy is. If your only strategy is hope, that isn't investing. That's just hope. You might as well just buy a lottery ticket. They'll probably have a better chance of earning than continuing to keep it on with RMR. I would predict what's going to happen with DHC is at some point in time, RMR is going to merge it, maybe with ALR, maybe with something else, to make a new stock. That's what they've been doing for the past 40 plus years. They're going to merge it with another company, and you're going to probably lose a huge amount of your shareholders' equity. Thank you very much, and hope you enjoyed this video. Now, if you like this video, don't forget to smash the like button and to subscribe to the channel. Thank you very much.